one of the unique features of Bluefield Solar is that we have a proprietary pipeline of about 1.5 gigawatts of solar assets, of which 800 megawatts are ready to build, and we've got high levels of what they call contracts for difference, which are regulated revenues attached to those. Very, very valuable for our shareholders, and something we've built up since 2019.
Hello, you're watching Proactive. I'm joined by James Armstrong. He's managing partner at Bluefield Partners, investment advisors to the Bluefield Solar Income Fund. James, very good to speak with you. You're out with your annual results to June the 30th today, and among the highlights is that you met your target for an 8.8 pence per share dividend, and that's despite facing headwinds over the year. Take us through some of the highlights.
Yeah, good to see you again, Stephen. Yeah, we're very pleased with it. It was a good, solid performance. We've delivered, again, a well-covered dividend, which is one of the highest dividends in the infrastructure space on a pence per share basis, as you say, of 8.8 pence per share. It's actually on where the share price is at the moment. It's a prospective dividend of about 8.3%. So it's a very attractive but well-covered dividend. So we've been the sort of the headwinds are, we had actually a bit lower radiation for the first time in our 11-year history. Radiation is very stable. It's a very stable energy source. It comes on in the morning, goes off at night. But it was a little bit down, just over 4% down. And we had a little bit lower production as well. So we had a couple of, as you say, sort of headwinds, and yet we've delivered a very solid set of results. I think the most pleasing thing for us was that we have executed or are executing what is a closed market, because at the moment we're at a discount to our net asset value in terms of the share price. We've been delivering what we agreed with our shareholders, which is creating liquidity for shareholders, really focused on capital allocation, which is about lowering down the revolving credit facility, doing a share buyback program to look to try and manage that discount, and also making sure that we're creating future value for the shareholders when the market recovers. And I think that's really encapsulated by the strategic partnership that we announced just before Christmas with GLIL, which is a really important part of the story over the past 12 months. So in summary, we're very pleased with how it's gone, notwithstanding some of the challenges in the market at the moment.
Looking at some of your ESG KPIs, James, you generated almost 811,000 megawatt hours of renewable energy, powered the equivalent of 300,000 UK homes, and that's up from 288,000 last year, and something that you can build on moving forward?
Yeah, I think the ESG side for a company like Bluefield Solar is integral to what we're doing, and it's very important. And I think, so that if you sort of equate it in a different way, we're powering a city, a population in excess of Leeds. So it's a pretty big, a production of renewable electricity. I think, yeah, I suppose the answer to that question is yes, we have one of the unique features of Bluefield Solar is that we have a proprietary pipeline of about 1.5 gigawatts of solar assets, of which 800 megawatts are ready to build, and we've got high levels of what they call contracts for difference, which are regulated revenues attached to those. Very, very valuable for our shareholders, and something we've built up since 2019. So in answer to your question, yes, we would look to those are very valuable in terms of a way of strategically building out the portfolio and increasing that capacity that we've got. But obviously that assumes that the market opens up. Equally, it gives us optionality, because if the equity markets don't open up, then it's a very valuable to be able to sell some of that portfolio, development portfolio to third parties. So either way, there's very good optionality value for our shareholders.
James, take us through your construction and development pipeline and what will be coming on stream in the year ahead, I suppose.
Yeah, so it's part of actually the GLIL relationship, which is called phase 3 of that strategic partnership. And we've got some extensions to existing portfolio assets, which we're building out. And then again, and also there's a big co-located solar and battery site called Mauxhall, which is in Lincolnshire, and we've built out the solar farm, and that's operational, and we're going to build out the co-located battery in the next 12 to 18 months as well. So we've got some activities going on. The big goal, though, Stephen, is this development pipeline, which is, as I say, we've got about 800 megawatts of assets which have planning approvals, grid connections, and need to be built out over the 4 to 5 years. And obviously, we would like to do that through the vehicle on the assumption that the markets recover. And we think all the indications, there's no reason on a fundamental basis for a discount to have a share price which is a discount to the net asset value. And we obviously hope and expect to see a re-rating in the stock quite soon. And we think we've got all the conditions in place for that to happen.
Well, James, I hope you'll keep us posted on any further developments. Thank you very much for speaking with us today.
Thank you, Stephen.
That's James Armstrong, Managing Partner at Bluefield Partners, investment advisors to the Bluefield Solar Income Fund.